In the context of bubbles, Goldman Sachs is predicting a downturn for Bitcoin, and a pro-blockchain UK regulator is calling for caution for Bitcoin and crypto investing. Yet, Bitcoin trading and usage is intensifying in Venezuela as their national fiat currency is down, devalued, and suffering from massive inflation. So markets go up and markets go down, yet if it costs $58 for a gallon of milk, then something in the matrix would need to change. Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together, welcome to Minting Coins. So there's a lot going on as always, another day and massive waves and motions in the crypto oceans around us. I want to thank you for showing up. Thanks for being here. Thanks for taking part in this Minting Coins show where we are really diving into what is happening in the news, what is the information that we're getting, and we're not just reading the news, but we're really asking questions about what we're reading and putting it into context for not just the moment and the craziness and the intensity of right now, but in terms of a greater context of the long game and where we're going. So there's a lot going on in the comments as well. I want to thank everyone for commenting and for liking the videos and sharing these videos. We're growing at such a huge pace. It's really, really exciting. And any way that you can help or support the station is really appreciated, and I'm having a lot of fun engaging with everyone and helping everyone as much as we can. Also, I just wanted to mention, with these long videos, check out the show notes where you can jump to specific parts in the show where we talk about specific topics. And also feel free to play the video in 1.5 speed, where if you just want to get the information very quickly, then you could just speed up the talk. But if you want to hear me at a normal pace and really digest all the information, then you know, you can listen to it at regular speed. But I recognize that the videos are long for a lot of people. But at the same time, there's many others, I think the vast majority of others, who are really learning and really evolving their understanding to be resilient about what's happening in the market. So when you read information on your own, you have a better understanding at how to take this information and how to redirect it with your own truth cycle, right? Your own understanding of how to process this information and to filter out the garbage, to filter out the hype, and to filter out the fear, uncertainty, and doubt, and leave yourself with the remnants of the pure information which you can use to make actual decisions, however, you know, that's best for you. So with that being said, let's take a look at the market. Let's see if we could have a couple laughs, review the news, and let's discuss. So here we are at coinmarketcap.com to take a quick peek at the market. We have Bitcoin over here hovering in the same spot that it's been over the past week, around this whole $2,500 mark. It's about, you know, I'd say about $100 up from where it was in the earlier part of the week. And what's interesting is that what I pair it to, which is the Litecoin, has increased. We are up way into the $2 billion club, pushing to the $3 billion club, and Litecoin has shot up to over $53 a coin. This is up from, you know, around that $30 area, and it's really interesting because the value of Litecoin has been going up, as percentage-wise the value of Bitcoin has been going down, and has created a huge opportunity for everyone that loves Litecoin, and everyone sees how the limited supply of Litecoin can fit into the crypto world, as Bitcoin becomes more expensive, and as there are questions looming about Bitcoin's ability to operate as a digital cash, as a currency, whereas Litecoin already has SegWit, it's already thriving. We have Charlie Lee focusing on the Litecoin coin, and so we used to be, if you've been watching the other videos, we used to be at a 1% connection between Bitcoin and Litecoin, and now the Litecoin here is around a 2%, so that parity has doubled. So the question is this a new norm where Litecoin is going to stick at 2% of Bitcoin, or is it going to go back to 1%? Meaning, is the value of Bitcoin going to go to $5,000 to put Litecoin back at 1%? Or is the value of Litecoin going to decrease? Personally, I think it's much more likely that the values of everything is going to increase, and that Bitcoin could increase to that $5,000 mark by the end of the year or within the next 18 months, although no one knows the future. The second thing that I just wanted to mention with all this is that we have Ethereum here at 371, and we did have this 10% connection between Ethereum and Ethereum Classic. And so as Ethereum has increased to $400 and has then decreased back to this 370 mark, Ethereum Classic has only increased so slightly, and there's been some really good news come out about Ethereum Classic over the past few months and even the past couple of days, and so we see an increase in price here to $23. Is it possible that we could see this $23 potentially double to $35 or $40 to get Ethereum Classic back up to that 10% mark of where it was trailing Ethereum? It'll be really interesting to see how that plays out. And then the last connection here with these top coins is just then the connection to Zcash. So Zcash is very, very close to Ethereum. Ethereum is Ether on the Ethereum blockchain. The Ether is 371 per Ether token. Zcash, which is limited, is 377. And what we've seen in the past is that when Ethereum gets a lot of news and people start purchasing in the Ether token, and this Ether token goes up beyond $400, if and when that happens, then what I would expect to see personally is then Zcash about a few days or a week later for Zcash to then increase after the Ethereum increases. So it'll be interesting to see if that pattern occurs. But this has been a crazy ride already for a lot of people. If you're buying into Bitcoin, if you're purchasing these cryptocurrencies, especially if you just got involved, we have this total market cap up here at $112 billion. We broke that $100 billion mark, $110 billion. We pulled all the way back down to $90 billion, and that didn't make anybody feel good, right? Maybe you purchased Bitcoin at $2,600, $2,700, $3,000, and then to see this pullback all the way down, where was it? $2,100, $2,200, and now it's still only at not even 26. If you bought Bitcoin at $2,600 or $2,700, you're not feeling good. But this is really about the long game. This is about the long ride, and this is about getting on the roller coaster and staying on the roller coaster, because if you get off this roller coaster and it goes to the moon, the gravity makes it as such that it's difficult to get back on. And so as I'm out there and I'm getting the news for you, I come across these really cool memes. And so there's this one person on Reddit that says, "I never sold, I just bought more." And we have this connection between Bitcoin and roller coaster memes. And so here's the Bitcoin roller coaster. It just keeps on going up and going down and going sideways, and at the end of the day, it keeps on ending up higher than where it started. And as more people demand Bitcoin and as more people want Bitcoin, then we would expect to see that Bitcoin price go even higher. But if you're used to Bitcoin, then you probably feel like these guys. And these guys are just on for the ride. They've been here before, and they've had a lot of fun, and I think they're having fun. but you know, this isn't new for them. But if you are a newbie to Bitcoin right now, then maybe this is how you feel, where it seems really scary and then it seems really fun, and then you really don't know what's going on, and then you're having fun again and you're still scared while you're having fun. And yeah, it's a strange ride at first, just to see how much is going in and just to see the overall valuations increase, not just from 2009 and not just from 2013 and not just from 2011, you know, just every year after that, right? In 2016, we had the Great Halving, when the total supply of Bitcoin being created by the miners was cut in half. The next halving is in 2020. This is a very important date. When that next halving happens and the new supply of Bitcoin being created decreases yet again, it's going to put tremendous pressure on the price 2.5 years from now to then go up even higher for that, because of the supply and demand factors. So real quick, we have Goldman Sachs here in this article from Cointelegraph.com that's predicting a bearish movement for Bitcoin. So if you're not familiar, bears hibernate, and so bears mean that the markets are going to go down. The symbolism of a bear and the bear taking its gathering its food and its berries and nuts and berries and going and hibernating. The bear market means a downturn in the market, where a bull market, and if you think the horns of a bull charging, you know, the energy going up, a bull market means that it's going up. So bears hibernate, bulls charge. And so when Goldman Sachs is predicting a bearish movement for Bitcoin once it reaches $3,100, first of all, we already hit that $3,000, and then we hit that downturn. So are they trying to say that it's going to happen again when it hits $3,100 again? I think it's really common for the markets to go up and for the markets to go down and for there to be some serious corrections. So Goldman Sachs is a global banking giant. We're not going to go into their Wikipedia page or anything like that right now. They're predicting this bearish movement, and it's coming from a report that they created on their own called the Blockchain Unchained report that came out on June 12th. They don't normally create cryptocurrency reports. I guess this is a little new for them. In this first report, they're saying that once it hits $3,100, they're expecting that price to fall. But if you think about investment banks and bankers and investors, if you're an insider in the banking industry and you know there's going to be a bear turn and the markets are going to fall, if this is your business, if this is your trade, then that's music to your ears, because when the price falls and is going to go to the wherever the bottom is, that's the time that all of these people buy. That's when they buy. When they hear there's going to be a bear turn, that's their chance to gather all of their nuts and all of their berries, so that once the market starts going back up, they're going to sell all of those, you know, cryptocurrencies or whatever those stocks that they purchase for the cheap. When everyone's selling them and the market's going down, that's when they purchase. And then later, when the market goes up, they're riding that wave of energy on that bull run. And so, again, they're expecting the Bitcoin price to dip further. And what I am thinking is that when that price dips, that's their opportunity. For whatever reason, when the price dips, that's their opportunity to get in, to be ready, to prepare for when that happens. That's when the cryptocurrency enthusiasts buy. It's when the investment bankers are going to buy. It's when the smart money is going to buy when the Bitcoin price goes down. So as an average investor, when that Bitcoin price, when you hear the markets are going down, that's not the time for you to be selling. You buy when the markets go down and when there's fear, and then you sell when things are great and when there's profits to be made, right? Now, you make decisions for yourself and whatever's best for you based on you and your financial advisor, but generally speaking, that's how the game is played. You buy low, you sell high. So then there's also this FUD about Ethereum, and don't let this, confuse you that Ethereum is rapidly increasing in an uptrend, and that the Ethereum market cap can supersede and become greater than the Bitcoin market cap. Bitcoin is long-term, slow and steady. It doesn't have inflationary aspects to it. Long-term, there's going to be more people who are going to be demanding Bitcoin, and so just be really careful about losing that Bitcoin long-term, even with the short-term changes and even with all of the success that I have for Ethereum. Don't lose your Bitcoin. So we have this UK Financial Regulator calling for caution in crypto investing. And this guy is Chris Woolard. He's the Financial Conduct Authority, the FCA Director of Strategy and Competition. And so he wants people to know that cryptocurrencies are not regulated financial instruments, and they do not have any consumer protections. What's interesting is that this is a gentleman who at the FCA has proved to be some of the most progressive backers of blockchain technology, granting US startups an e-money license and increasing commitments to blockchain startups through what's called the Sandbox Initiative to help new blockchain and distributed ledger startups in the UK and their jurisdiction. And so they're not saying that, in his quote here, Woolard says, "I'm not saying that we view digital currency as inherently a bad thing, but we do have to exercise a degree of caution." And justly so, because there are scams out there, such as the OneCoin scam. And if you haven't heard, OneCoin is a scam. Don't do anything with OneCoin. And what things are going to be happening in the market where this pro-Bitcoin financial sort of, not financial, but Financial Conduct Authority Director is saying this. So on one hand, it's about Bitcoin and blockchain in general. And so we have Bitcoin lumped in there, and we have all these ICOs lumped in there. And with all these ICOs saying that they're blockchain technologies, when really they might just be companies using blockchain as a database, people who are investing into these ICOs, and then if and when they lose their money in these ICOs, then that's going to give a black eye to the Bitcoin, and that just creates confusion and uncertainty with someone who doesn't understand this space of blockchain technology, and confuse them. If they don't know anything, and someone says that the ICOs failed, how do they know that what's the difference between Bitcoin and some defunct ICO? It's hard for them to understand that. That creates fear and uncertainty in the price. And people can lose money, not just in the ICOs, but as they're buying and selling their Bitcoin at horrible rates. And if you lose your Bitcoin at a less than market rate because you're scared out of it, because we're on a bear turn and there's a lot of fear and uncertainty in the market, that's just opportunity for the smart money to take that off your hands, knowing that the market is going to go back up either sooner or later. And so with all this fear and all this uncertainty and all this regulation talk around cryptocurrencies and blockchain technology, and how this is so unsafe for consumers to be holding Bitcoin, and how it's so much safer to be holding the country's fiat money, what we see across the world in some parts of the world is just a completely different story. And we see this play out over and over again. Let it be in Greece, or as in this article is talking about in Venezuela. So Bitcoin trading in Venezuela has been intensifying as the Bolivar is still down. It's still down, it's still devalued, and the country is suffering from massive inflation. This is a major country. This is I would say to a huge degree, a world power with major resources, a major economy, what I would have presumed to be a strong economy and strong politics, but apparently I was incorrect about that because of everything that's been going on over the past several years, right? And so what we have here is that we have a Bloomberg article pointed out. So this is Bitcoin.com, an article on Bitcoin.com that's referencing a Bloomberg article which pointed out that in June 15th that Bitcoin trading had jumped to 1.3 million per week, $1 million this past week in Venezuela. And so in many places, people are hesitant and skeptical over Bitcoin. We're seeing it in the United States. We're seeing it in different countries, especially first world countries where everything is just fine and there's nothing wrong, and maybe everybody has a bank account, and people fight about politics or just simple stuff without really having concerns about extreme problems in the rest of the world. And so what are the reasons that Bitcoin is dangerous? Bitcoin is dangerous because of the violent market fluctuations. Bitcoin is dangerous because of the questionable legality. Bitcoin is dangerous because of the concerns about its utility. But in Venezuela, no one can afford the luxury to be concerned because the price fluctuations and all these other concerns are negligible compared to the devalued Bolivar, which is their national fiat currency. And so as our fiat currency has become devalued, it's more and more difficult for them to purchase food, for them to purchase energy, for them to purchase the things that they need. It's more difficult for them to get paid as well, because if you're getting paid for your labor, you're getting paid for your services, what's $20 an hour when $20 is fluctuating between, let's say, 2 and 200. It makes it really difficult for you to work through a 5-hour shift when $20 an hour has a different value fluctuating from minute to minute. But these extremes of their currency are so extreme that what everyone else is saying about Bitcoin, Bitcoin is just a calm pond on a windless day compared to the violent fluctuations that they're having with the fiat currency. So let's read this. So there have been many reports of people residing in Venezuela turning to Bitcoin to hedge against the country's economic failures. Venezuelans have been using Bitcoin because their national currency, the Bolivar, has been significantly devalued, and citizens using tender are suffering from over 1,800% inflation. Not 18, over 1,800% inflation. And so we have this example here from the Financial Times, where a mother describes the process of buying her family food, where she purchased a government-provided food parcel. It's essentially what I would expect to be like a ration card purchased from the government, and then you purchase this ration card for 10,000 bolivars, and then you can use that to get some milk and some eggs and some bread, some basic things to feed your family. You probably don't get meat, you probably don't get chicken. And so what's happening is that she's purchasing this food parcel for 10,000 bolivars, and it's about the same as spending $2 USD. And the issue with having this poor performing currency is that it allows for political corruption, because if one area 10,000 bolivars equals $100, and another part of the area 10,000 bolivars equals $10, then the politicians can leverage that because they have the authority to leverage the arbitrage between the different valuations, which naturally means that someone at the other end of the stick is going to get screwed. And the people who get screwed are the people who are not politicians. The people that get screwed are the masses who are looking to purchase milk and bread. Even if the milk and bread is the same cost for the politicians as it is for everybody else, the politicians are getting such better arbitrage numbers that they're making money on top of the money because the system is set up for corruption. And so through high volatility, Bitcoin is considered more trustworthy than the Venezuelan Bolivar, which has led to the massive devaluation since the oil price collapse began over 2 years ago. So I guess that's what they're saying. It's all starting on is that whole oil collapse. But, so with Goldman Sachs calling for a bear market, telling everyone to be cautious about buying Bitcoin, And we have regulators talking about Bitcoin and just warning people, not just about Bitcoin it sounds, but the Bitcoin and these other ICOs and cryptocurrencies. I don't think the people in Venezuela ever thought that there would be this possibility that they can experience this 1,800% inflation. And I just want to bring this back home to you if you live in America, or if you live in a country where you're not experiencing this massive inflation. So if you're living in America, I want to go over here to the Bureau of Labor Statistics data. This is at data.bls.gov. And you can get this data from their data tools. And so what I pulled up here for us to look at, let me zoom this in a little bit. Perfect. So this is the database tables and calculators by subject. And so what I picked out here is that I picked the consumer price index average across the nation for a loaf of white bread, 1 pound. And so we see that right now in 2017, May 2017, the consumer price average index for this loaf of bread is $1.23 rounded up. And this is actually cheaper than it was earlier this year. But if we look at from 10 years ago in 2007, the average of this 1 pound of bread was $1.19. So between 1 year ago and last month, this has increased about 10%. So the loaf of bread is 10% more expensive. And maybe you don't feel that because it's not 100% more expensive on average for the average person, but it is 10% more expensive. So you're experiencing this small amount of inflation where the cost of this bread has been increasing. And so here we have some eggs. So here we have the price of eggs has actually decreased a little bit at the same time on average. And then here we have, what do we have here? Milk, a gallon of milk. And so that's also stayed about the same, gone down a little bit from a year ago. We see how we just have these different fluctuations over time. But what I want to do is that if we experience massive inflation, what would this look like for you? All right, so seeing how much this would cost if the Americans experience $1,800 of a price increase, let's take the 1327 and let's add in to that loaf of bread, let's add in some eggs at $1.41. And then we're going to add in a gallon of whole fresh milk, $3.24. This is $5.98. So we're going to say $5.98 on average for the average American in May 2017 for a gallon of milk, a dozen eggs, and a pound of white pan bread. And so we're going to go to Google, because Google has this cool calculator. We're going to take $5.98, and we're going to multiply it by 1,800%, and we're going to see what that equals. And so for the gallon of milk, a loaf of bread, and a dozen eggs, we have $107.64. So that's what 1,800% inflation would look like for you if you wanted to purchase a gallon of milk, a dozen eggs, and a loaf of bread. It would cost you need a Benjamin and then to break a second Benjamin to make that happen. So can you imagine what that would mean if you had a trust that, if you're getting paid $10 an hour, $15 an hour, $40 an hour, and you weren't sure if that was going to buy you this much food or that much food? It's a really difficult situation to be in. And so when we see that these people in Venezuela are experiencing an 1,800% inflation, it creates greater context for us in terms of what does that mean? What does 1,800% mean? While the loaf of bread is up 10% from 10 years ago, can you imagine if the loaf of bread went up 1,800% in the course of just 1 year? It would be mind-blowing. So it's a lot to consider. It's a lot to think about. Sometimes we get some advice, and that advice we might not trust, and we just don't know what advice to trust, whose advice to trust, when to listen to people. And so it's important to make your own decisions, to get your own information, to do your own research, to fact check the information that you get. There's times when I'm reading information in some of these articles, and these articles say one thing, but let it be a simple mistake, or let it be that the website is owned by another company or has a partnership with another company, or someone gives the author incorrect information, or that author just presents the information in a way that's not accurate. We got to be really careful about the information that we are reading and the information that we are hearing and how we process that. So Goldman Sachs tells us there's going to be a bear turn in the market when we reach $3,100. If that's true, then and we hit that bear turn, we just want to recognize that everyone is going to purchase in as soon as they feel as if it's as low as possible, and to just use a lot of caution as people are using the fear and using the uncertainty and using the doubt, because fiat dollars can be printed, the inflation rate goes up, but Bitcoin is limited. Bitcoin, they call Bitcoin the gold 2.0, but maybe it's more like a diamond. Maybe like diamonds are forever, maybe Bitcoin is forever. And it's sat at 21 million. So what do you think about that? What do you think about Morgan Stanley and Goldman Sachs and these different regulators across the world, these different bankers across the world, really giving a lot of warnings about Bitcoin right now? Do you think it's just a coincidence, or do you think that it's an accurate statement to think we're going to go to $3,000 again and then crash? I'd love to know your thoughts, or share them in below. Like this video, share this video, yeah, I appreciate your support in any way possible. We appreciate your support in this show. We couldn't do this without you. I'm glad that together we are minting coins.